in couple of ways. Okay, the basic layman theory, market, it always go by a cycle. All right, so cycle, you can put it like this, maybe move up and down like this. It's always bull market, peak, bear market, bottom. All right, then bull market again, peak, bear market, bottom. So you need to know when is the starting of all this cycle, all the stages. So like for us, we know that, okay, market is going to turn bad, it's at the peak right now, then we need to get ready for the bear market. So that's where we look into some of the put structure warrant. Then we can actually, when the market is down, then we can actually make some profit or hedge on the market down. Okay, like FBM KLCI, you have a lot of put structure warrant. Just be careful when you are selecting it. So which one is the better one for you to select into it. All right. So you can find this out in malaysiawarrants.com. So .com.ny, I think. Wait, let me find Malaysia warrants. Yeah. So it's actually a site by Macquarie. So I like to look into those the structure warrant that they issue, because they always have a good liquidity in the market. They do a really good job in market making. So whenever you want to sell, then there's enough of the market making bid price there to maintain it there to allow you to sell. Okay, so for our site here, we didn't actually look into FBM KLCI because FBM KLCI is relatively more stable. We just look into the Hang Seng Index. So when you're choosing maturity, then you have to look at, if you have to know this, there is maturities in structure warrant, because structure warrant wise, the issuing the duration is usually not more than 1 year. Okay, so if let's say not more than 1 year, along the way when it's getting near to the expiry date, then the structure warrant price will actually goes down very fast. So even though the underlying asset is actually moving according to your put or call warrant, then you will actually still lose money in it. Okay, so it will expire. So when it expired, what it's going to do, they will do a cash settlement. So they'll do a calculation from that. If you want to know how to do the calculation, you can either go to the warrant education over here, or maybe go to our YouTube channel to find one of my video that I share on how to do the cash conversion for the settlement in structure warrant. Okay, so again, I need to tell you this is not any of the sponsor. They don't give me any sponsor for showing this. It's just purely based on my own opinions that I find that this is actually, so far that I find is better, because some structure warrant in the market, you just see that the, what you call that, the market making is very bad. Not to say very bad, there's no one is actually at the bid price. So when I want to sell, I can't sell, right? So they don't give me sponsor. I'm just sharing my own way of looking into it. So why I look into Hang Seng Index is because I find that the market is actually, overall in Hang Seng Index is the stocks, everything is actually going down. Of course, partly because from the central government that is tackling a lot of having a lot of policy that have some restriction in some of the company. Not to say restriction, but it's more like more strict on the company business from there. So other than that, we see a lot of funds are moving out, and also a lot of people are getting out from there. So that's why I see that the market is not really that good. So if let's say if it's a bear market, what my own opinion is that it's more likely to easier to actually go down lower than moving up higher, kind of things in the very short term. Okay, so this might not be happening for long term, so it's just for short term. So what we see from here, this is how I look into it. Of course, choose those like at least like maybe don't choose 1 month. 1 month is actually very, although if you look into 1 month, the price is actually on this one put warrant because it's in the money. So let's say call warrant, because it's against the market. So it's call warrant means that you you are buying that HSI will actually move up higher. Okay, the Hang Seng Index will move up higher. Put warrant is that it's more like a short selling index. Okay, so you can see it's very cheap over here because it's getting to 30th of August, end of this month. Then is the what do you call this? Is the expiry date. So people think that it's not going to move back to the exercise price of 25,000. Okay, so that's why it's very cheap. Yes, it's cheap, but you won't make profit from it. Okay, because it's out of the money. Out of the money is because right now Hang Seng Index is about 19 over 1,000. So exercise price for this is 25,000. So you won't exercise this call warrant to get at 25,000 to sell it in the market for 20,000 or 19,000, right? You'll be at a loss. So that's why it worth nothing from here. Okay, if you are looking into this, so it doesn't mean that it's cheap then it's good for structured warrant or any of the stocks. Also the same thing for all these securities. So make sure if you really want to look into it, then go to our YouTube channel to find out more about structured warrant. How does it work? Okay, so I'm not going to share more about this over here. So when peak market, then we can actually look into this. So if let's say during the rebound market, then we can also look into this going for a call warrant. Okay, but maybe depends on which index you want to look into it. Okay, so selecting it, usually what we do here is that we look for something that effective gearing. The high effective gearing means that each tick of 1% movement in HSI, then there will be a 6.6% movement in this structural warrant. So this one is actually quite high over here. Okay, so higher it is, then the more sensitive to the underlying asset. So when you look into this kind of structural warrant or maybe derivatives, please do remember that you shouldn't look into the chart of this derivative. Okay, let's say you look into the structural warrant of let's say for this example is HSI HET. So if you look into this, don't use this chart itself to predict what is the future price movement, because this price is actually following the Hang Seng Index. So you need to look into the Hang Seng Index price movement. But if let's say if it's an index, you shouldn't look into the index chart to roughly guess, oh, it break this support and the price actually goes down lower. Oh, it break this resistance, then the price will actually move up higher based on the index. Okay, no. If you really want to know what is the next movement or what is the trend of the index, then you need to look into their component stocks. Then you find their component stocks. From there you understand overall majority of the stocks in the index component index, the index component stocks, is it at the bullish side or is it at the bearish side? Okay, so are the big boys in these component stocks are selling their shares? Are they coming in to buy the shares? If let's say they are coming in, then you can go for a call warrant. Right, so that's one thing that I find a lot of people when they look into the derivative or this index, they try to look at the chart to the chart of the index to find out. But we need to know the root of all these financial product or indexes. What actually caused the price movement of this index? What are the things that cause these things to move? So are the component stocks. So you need to look at the component stock to find out what is their direction it is. All right, so that should be the way to look into it. You shouldn't, if let's say you are just drawing lines in this, okay, or resistance line or support line, if let's say you break, then it goes down lower kind of thing, I won't say it won't work. It might work sometimes, but it might not work sometimes. Okay, it won't work sometimes. It's not effective. Okay, why is it sometimes good, sometimes not good? Basically, you are not following the right or you are not analyzing the right thing, that the call to move the price of this index. All right, okay, so that is what I want to share here today. So I hope that every one of you are able to have a little bit of understanding of uh, the market right now and how you can react to it. So like I say, it's a bit mixed. So what you can do right now, what we do, intraday trade still okay. So some of the stocks, they are going to have some rebounds. So we can still look into some of the stock rebound, because some of the stock, they have already done the retrace last week. So some of it, they are starting to have a rebound soon. Some of it are, they are on the way of having the retrace. So that's why this is the time you really need to know and precisely follow, look into selecting your stocks, selecting your investment. Okay, don't just hear and say, or hear people say this is good. All right, one thing is that whenever someone wants to sell the shares or distribute their shares, usually they'll come up this kind of way to convince you. First, they'll tell you, hey, I have insider news that this stock is going to double in 2 to 3 months time. Okay, so this is the first one. After so many years, I still hear the same story. All right, then they'll come out with some some story that's saying like, oh, the who tell me that they already got this project, it's not announced yet, so you can have a look into it. Then there's you might think like, sure or not. Okay, then they will follow up with some of the so-called very solid things, which is the fundamental of it. The financial statement of it is strong, they have cash rich, or whatever things it is, those fundamental of it, which is like 3 months back old, or maybe 1 quarter old, or 1 year old before. So valuation is different, right? So things change after pandemic. We know things change. So 2020, 2019, about end of 2019 and the early of 2020 is totally different. So 1 year back data of the business, can you use that as reference? I mean, that's my own point of view, but for you to think. All right, so they will come out this kind of story. All right, so if you hear this kind of story, then please be careful of it. All right, it's always this kind of story. All right, so don't listen and things like that. So try to learn. Okay, I mean, making profit in the stock market can be it has a simple way, but it's not that easy. Okay, it's not saying that you hear and then you look into it. You need to learn how to analyze that. And if you have already learned a lot, technical or maybe fundamental, but you're still not able to find the right way out of it, all right, so you can let us know, contact us, right, so we can actually coach you, let us find out what is the things that make you not able to have a very consistent result from the stock market. Okay, so that's what we do. All right, so thank you very much for joining. Of course, if you like our session over here, do remember to share this to your friends and give us a like. All right, and subscribe to our YouTube channel and our Facebook page. I'll see you guys again next week, or maybe on Sunday, whichever day you are free to join us. Okay, thank you. Bye bye.